Thanks for being here so early. Well, last night I called Brooks and I asked him, how are you gonna wear? So he told me he was gonna wear white shoes and jeans and a blue jacket, so I decided to do the same. So that, we could do an act together. We play for the same band. So anyway, thank you for being here. We are truly honored to have Brooks here with us today because he's one of the pioneers in the fintech sector. He was using the term fintech back in 2012, where maybe some of us were talking about the concept but not using the term. So we are very, very lucky to have one of the pioneers in the sector with us today. And his experience is incredible. He has built startups. He has worked for large companies like Microsoft. So his experience is from all over the place. So join me in welcoming Brooks today with us.
Thank you, Alvaro. Thank you.
So Brooks, to get us started, when we spoke, one of the concepts that you mentioned that I thought was really interesting is fintech was deconstructing and reconstructing financial services. And I'm sure if there are bankers here, they think that there's nothing to deconstruct. So all due respect to them. So tell us a little bit more about that. About this concept of where were you seeing when you started Fintech Collective, about what needed to be deconstructed, and over these past now 10 years, because you founded Fintech Collective in 2012, what has been reconstructed, and what lies in the future in terms of deconstructing and constructing?
Yeah. Alvaro, thank you, and thank you to the Finnosummit team for having me here. I first came to Mexico in 1994. So in saying I was a pioneer, I think you're aging me. Maybe that was ageist. To study Spanish in Cuernavaca. So Fintech Collective as a firm has been quite active in Mexico and Latin America since then. I think to zoom out a little bit, we formed the firm in 2012. We had been entrepreneurs and operators for 17 years prior to that. I started the firm with a Brit, whom I've been working with for 22 years now. And when in 2012, we were 40 at the time, and we literally, as every good entrepreneur does, when they start thinking about what's next, we took a day out, literally, of what we were doing. We got in front of a whiteboard, and we started piecing together a story of what we thought we saw happening 3-4 years out from the financial crisis. And that, to us, really set the context for what we've seen in the last decade of fintech. And the basis of that is that financial services has always been one of the largest spenders on technology. They've always had the best and the brightest internally developing solutions. And with the global financial crisis, something happened. There was people would ask us in 2012, why now? Financial services has always been innovative. And what you had was this economic catalyst. From the financial crisis for the next 5 years, institutions were consumed with business as usual. They were consumed with compressing margins. They were consumed with this avalanche of regulation. And internally, it was a cycle that would just repeat itself every day. Lack of organic growth. If you stepped out and looked at the tech sector at that point in time, it was just accelerating up and to the right? All these talent coming out of business schools, coming out of university, was going into Silicon Valley, was going into tech. And so we felt that when we looked at the tech sector, what you saw actually was some fundamental pieces starting to mature. And we thought that the next horizon of opportunity sat at the intersection of maturing building blocks coming from Silicon Valley and financial services. And that economic catalyst of firms no longer being able to innovate and keep pace and hire the best and the brightest created this landscape where we thought for the next several decades, as you said, every segment of the markets, from capital markets, wealth and asset management, banking, lending, payments, insurance, was going to be deconstructed and reconstructed. And that was the basis on which we started the firm in 2012. If you Googled Fintech in 2012, there were exactly 2 references. One was a alcohol payments distribution company in Florida that facilitated cross-border, like Florida to Georgia, Florida to Alabama payments in the alcohol industry. And the other was a company in India that was a systems integrator called Fintech Systems Limited.
Yeah, well, it's we've come a long way in these 10 years, no question. It's now mainstream. But you said something which I find it really interesting. In this process, one of the main elements that you just mentioned was talent. The talent that was focusing on this. And many times when we think about fintech, we think about the technology, but we don't immediately think about the talent. And you know, here we are surrounded with amazing talent that is exactly building the fintech ecosystem. So tell us a little bit more about that talent and what's special about everyone here that are focusing on this.
Yeah, I think as we started to go into the market and tell the story at that point in time, the thing that we noticed was that the entrepreneurs that were going to start companies, even compared to the companies that we had just been operating in, were moving at a pace that was wholly different than the pace that we had been able to operate in. And the caliber of the individuals was on par, better than any of the people that we had worked with for the prior 17 years, where we had had 4 exits, 2 publicly traded companies, exited a business to Microsoft for more than $1 billion, all of that globally. So we had a lot of reference points. And I think that kind of jumping ahead to today, and I think for a lot of different reasons, the tagline for Finnosummit, a new era of fintech, is quite appropriate. And we can build on that a little bit more, but one of the things that is most exciting as we look to the next decade, and one of the things that we think is driving the opportunity set, is that you've got now a generation of entrepreneurs who have come of age as operators in high-growth fintech businesses over the last 10 years. They've got something that is gnawing at them that is either a passion or a problem that they want to go solve, and they're spinning out and starting their companies. And so about 2 years ago, in different ecosystems around the world, we started to see this dramatic acceleration in our top of funnel, right, in the companies that were being started. And it became clear very quickly that it was this recycling of talent. And I know we'll get to this in a little bit, but one of the other sort of talent indicators that we found as a major signal, starting in about 2015, was the talent flowing from institutional markets into crypto and ultimately DeFi. I went to a DeFi meetup in New York City in the early days. So this is 2016, 2017. Not that long ago, but for DeFi, that was a while ago. And this very, very skinny 28, 30-year-old was talking about his project. And it turns out his name was Hayden, and his project was Uniswap, and it's one of the more important things happening in the space. And there were about 100 people in the room, and they weren't what people imagined or want to imagine crypto operators were. It wasn't Dungeons and Dragons. It wasn't a bunch of people in Birkenstocks and, hoodies. It was people who were coming out of institutional finance and institutional tech. And that was one of our earliest indicators that we thought we were going to see a dramatic acceleration in what was happening in and around the digital asset space.
Great. So we'll definitely dig a little bit deeper on digital assets. By the way, obviously Brooks is here, and I guess you'll be available after this. But also, Brooks' partner, Carlos. Where are you, Carlos? I can't see you. You're right there. So Carlos is also here from Fintech Collective. So if you guys want to talk to them, Carlos is the one focusing in Latin America. But talking about Latin America and talking about talent. So Fintech Collective, you guys invest all over the globe.
Yep.
Before we go into the market of Latin America and what's exciting you about Latin America, let's talk about the talent that you're finding in Latin America. How is it different than other regions? The quality of the entrepreneurs that you are investing in. Tell us a little bit more about that.
Yeah, I think I'll use our portfolio as a representation, but if you look at people like Courtney McColgan, CEO of Runa, Norman, CEO of Fundadora, Nima, CEO of Minu, Nico, CEO of Axio. These are people from 3 different continents who have been highly educated, have been operators in both startup, scale startup, and traditional organizations, and have had their choice of where to start a company. They could have started, Nico's French, he could have started a company in France. There are a lot of government subsidies. There's an incredible pool of talent in France. Same with Courtney, right? She went to Stanford, could have started a business very easily in the US. And so I think one of, again, these subtle shifts that we saw was talent who had operated outside of the region, had developed business norms, had reference points and came back, had a problem that they wanted to solve in their local markets. And when we think about investing in emerging markets, we narrow the aperture to cities and the broader ecosystems around those cities. So we focus on 4 cities: Lagos, São Paulo, Bogota, and Mexico City. And we think the conditions are right to make the opportunity set actionable, from an age of population, urbanization, tech adoption, regulation, quite important. The capital stack is very important. And we've seen the development and the depth of talent getting to a point which is aligned with what you've seen in Latin America, right? In both Brazil and Mexico, a couple of years behind, beginning in about 2016, started to see a dramatic increase in investment into the ecosystem.
Great. So here we have entrepreneurs, we have investors. What would be, those entrepreneurs are building a team, and those investors that are looking for the right investments. What are your recommendations on what to look for in terms of a team? Somebody that's building a team or somebody that's investing? What to look for in that talent?
So we invest early stage, which for us means first checks, seed and Series A. We lead, we co-lead. Outside of the US, we partner significantly. We're partnered in Fundadora. And when we're making that first investment, there isn't a lot of observable data, to say the least. And so more than half of our process, from our perspective, is looking at the people and the talent. If there's a team, looking at the team. And to us, it is the most exciting phase to build a company because of the unique set of challenges that come with building an early stage business. And it requires a cocktail of determination, of belief, of conviction, of leadership, of adaptability and creativity. We think humility is an important part of that cocktail. And so when we're specifically looking at the CEO and founding team, we're looking for that combination that we think can go from whiteboard to deck, to raising your first capital, to prototype, to building your first team, to individual contributors turning into managers, turning into leaders, all while never having more than 9 to 18 months worth of capital in a period of one's life that the opportunity cost is probably the most significant, opportunity cost of your time, right, is probably the most significant thing that's on risk. I think what we've seen is a massive creativity in how people hire and build out their teams. Courtney at Runa put together a PowerPoint deck. You should ask her to walk you through it, that sold Mexico City, sold Mexico, and was recruiting people from the US, either Americans or locals who had been in America. In Sao Paulo, we've got a founder who is trying to create a developer ecosystem. Sam in Bogota, Minu in locally has a large office in the center of Mexico City that has space to hold events and is trying to create, likewise, an ecosystem and community. So you see a lot of creativity in how people are solving that.
Yeah, that's amazing. And it's interesting how you're seeing in Mexico the landscape where teams are being built by co-founders and team members from all over the world. And it's really become a completely cosmopolitan ecosystem, entrepreneurship ecosystem in Mexico.
And I think even within Latin America, what we've observed over the last year is that Mexico is a must-be destination. So we're seeing companies that may have been founded in Colombia migrating to Mexico. We're seeing the same with Peru. We're seeing the same with Argentina. And it's really quite exciting for us and for everyone involved in this particular ecosystem to see just how much of a center of gravity Mexico is becoming. And I don't think there's anything that's going to stop that.
No. I don't know if you know this piece of data, but the GDP of the metropolitan area of Mexico City is the same size of the GDP of all of Colombia. So this is a massive market, and sometimes we don't realize that. This is an amazing market. But on that point exactly, so let's focus now on the LATAM ecosystem. What is it exciting for you about this market? Why are you enthusiastic about this market? And in that, specific fintech verticals that, because fintech is a mouthful, specific fintech verticals that you are particularly excited about in this market in Latin America?
You're right. It has quickly gone from being a vertical to a horizontal. If you've watched the soccer film Football is Life, fintech is life, right? Like it permeates almost every segment of consumer, commercial, institutional, and government life. As a firm, when we define fintech, we've had 4 pillars, which roughly represent the main sectors in fintech: capital markets, wealth and asset management, banking, lending, payments, and insurance. And we're a very thesis-led investor. And so we have, at any given time, 25, 30 different themes in each of those sectors that we're pursuing. And when the very best talent walks through the door, we're very efficient and we invest. So we don't put up this very rigid structure of what we think the future should look like and then go find a company to put in each one of the boxes. It gives us enormous flexibility as an investor to follow the talent and also follow the maturity curve and the innovation curve in each sector and in each market. Broadly, when we think of those sectors in capital markets, we think about capital coming closer to the source of risk. So previously you had asset owners going through reinsurers, going to insurers to get close to the risk. With technology, you now have asset owners coming right up to the risk. So we look at exposure as a result of climate change, right, as an example in that space. We look at asset owners trying to get into infrastructure-based projects. Historically, that's been hard infrastructure: roads, tolls, electricity, telco. Increasingly, technology is creating the ability for those asset owners to come directly into the tech space. Wealth and asset management, I think, is an incredibly interesting space in LATAM and in emerging markets that is, to us, still a little bit further out on the horizon. There's very good data that shows this inflection point at GDP per capita at which you shift from sort of the hierarchy of needs of what you have to discretionary spending. And that's the point, market by market, at which we think things like wealth management and insurance will start to be available. But this idea that the next 500 million people globally are going to come into the investing stock market is quite exciting. The idea that it can be profitable to set up a savings account. Minu is setting up a credit union, basically within the employers for people who have never had savings accounts. They've never had investing accounts before. So once it starts to become very, very simple with no friction and the costs are acceptable for the company to be able to do it profitably, I think you start to unlock some incredible opportunities. In banking, Funday is very, very focused on bringing this massive focus on customer experience and elegance to provide a digital bank for consumers in Mexico. And we think about Funday being the first digital bank by Mexicans for Mexicans. And I think the team there is incredibly talented. In the payment space, it's one of the first places people look in emerging markets, the infrastructure to facilitate this shift from cash to digital. There's been a lot of data in the last few weeks that, hang on a second, like in Mexico are individuals and consumers benefiting from fintech? We haven't seen that bump because so much of the transaction volume is still in cash. And I think that underestimates the effect that technology and everything that we're all working on is going to have on this shift from cash to digital and appropriating people into the money system. Insurance isn't available for most of the population, right? And not more than most, like 75, 80% of workers don't have occupational coverage in insurance. It's fully a discretionary item. One of our very early investments was a parametric insurance product for farmers. So it was paying out a policy based on satellite data if it rained too much or didn't rain enough. That's pretty amazing.
Yeah, no question. So we can't not talk about the context. We are living through an evolving context, which obviously it's making us reassess. So tell us a little bit about your perspective of this evolving context. Where should we be? What should we be thinking about? What should we be aware? And what are the opportunities with this evolving context?
Yeah, it is important to talk about. My overall theme is phenomenal excitement for everything that we have ahead of us. When anybody asks me, with the proliferation of investors into the fintech space and capital and the number of startups and fintech really becoming part of the vernacular, a superficial observation would be that fintech is done. Anyone who works in any vertical of financial services can see all the paper and the people and the limited applications of machine learning, much less AI. And we haven't even gotten to quantum, and we haven't even talked about crypto yet, right? So we're early. And when you get to emerging markets, we're even earlier. And this will be foundational infrastructure, creating social and economic mobility and enabling the next generation of small businesses, which is what powers the economies in these countries and in these markets. So my overarching comment is extreme enthusiasm. We can do this for another 3 decades, and we'll still have plenty to do from there. That said, if you look back to 2000, there has, I'm oversimplifying, but every 10 years, there's roughly been a major shock to the global market system. And the first was, of course, the internet boom and internet bubble.
Right.
In the US, in New York City, where I was living, you had 9/11 right on the back of that. Then you had the global financial crisis. And I think that the twin factors of COVID and the current asset repricing that is happening and shift in fiscal policy is setting the context for the next 10 years. We have come through a 40-year cycle of lowering rates, which is reversed. I don't know if I'll ever see a 2% mortgage again, which makes me a little sad. We are coming out of a 10-year
By the way, don't worry. In Mexico, we've never seen anything close to a 2% mortgage rate. So
fair point. But no one's going to own homes. We're all going to. That's why home equity is going to be fractionalized. That's why the platforms in the prop tech space are trying to facilitate people renting. I've been told millennials don't want to buy homes anyway. So there are a lot of factors at play there. But we're coming out of this period of 10 years of lockstep growth in the markets and easy liquidity. And so you have a generation of people plus or minus 32, which is probably the median age of the founders, who have only seen one market. Right. And 2 years ago, when COVID kicked off, we, as most everyone else in the sector, went out to our CEOs and said, this could be 18 to 24 months. You better cut your OpEx. You better secure your cash runway. This could be bad. In fact, it was the opposite. It was amazing, right? Most fintech businesses really accelerated in that period of time. The current changes in the asset repricing that's going on and the changes in fiscal policy, I think, are going to be different. I think we're in for 18 months of difficulty. Pricing is definitely changing. Valuation multiples, conversations around multiples in early stage businesses that were revenue generating for the last couple of years had started at 20 times current revenues, 10 times 12 months forward revenues, and went up from there. I think that's resetting back to 10 times current revenues. And in many cases where you don't have 100% growth and a strong handle on durable unit economics that ultimately could get to profitability, or at least can be maintained, companies are going to be looking at potentially flat rounds. And the ones that don't grow are going to get a year out, and we're going to see M&A that at best case might be the price of the last round. So we have gone out to our portfolio. We're securing runway into 2024, and we're managing expectations around valuations. I think that's the most observable effect. Great companies are getting funded. We just had a company in TechCrunch today called Constrafor. It's going after the construction industry, an industry that's seen 1% gain from productivity due to technology in 20 years. Over the weekend, which was a holiday weekend in the US, we announced a $46 million round into a B2B payments platform in Berlin called Mondu. So there is a lot of capital in the space. I think for the summer, most people are really heads down focusing on their portfolio and opportunistically writing new checks. I think come the fall, I would expect us to start to see a little bit more velocity. But I don't think we see a sharp V recovery in the way that we did with COVID.
So what Brooks is telling us, if you're fundraising right now, take a break, take the summer, and come back to the market in the fall. So just in the last 3 minutes, we promised that we would dig a little bit deeper on DeFi.
Yep.
For me, it's one of the most exciting areas for one single piece of data. In DeFi, 90% of the revenue goes to the investor or depositor.
Yep.
When in traditional markets, in traditional financial services, 25% of the revenue goes to the depositor. For me, that's a huge disruption. And with that, that's why I'm so optimistic. But tell us your view on DeFi.
So we started investing broadly in the blockchain crypto space in late 2013.
Did you buy Bitcoin?
What's that?
Did you buy Bitcoin?
I did. I bought my first Bitcoin at $352.
All right. He's done well. He's going to pay for the drinks tonight.
But I bought one.
Still, he's going to pay drinks for tonight.
And we started investing in DeFi out of a portion of our main fund in 2017. Last year, we raised our first dedicated fund for digital assets focused exclusively on DeFi. We have a dedicated team now focused on DeFi. And to your point, the two things that are super, super interesting are taking all of the products and services and processes that we know in institutional, consumer, and commercial finance and breaking them down into their atomic parts each of which are projects. And secondly, which means that you can start to compose solutions in different ways. And the second is this redistribution of profits. Right. I think about Instagram, right? Sold for $1 billion. If Instagram were created in DeFi, then that profit pool would have been distributed into the people who are posting images and the greatest influencers. Right. I think the next turn on this becomes this intersection of digital and physical, which people talk about as the metaverse. I think it's a net new economy, just like the creator economy is a net new economy that could be very, very important for emerging markets. While we started investing in this whole space in developed markets, we've believed from the beginning that a bunch of the applications could accelerate faster in emerging markets, creating better access, better transparency, better pricing.
We have some questions from the public. Brooks, what specific fintech sectors do you see more opportunity in the near future?
So I think everyone will look at fintech in emerging markets and look at consumer finance, data-driven consumer finance. They'll shift on to digitally enabling SMEs, B2B transactions, and the third bucket is infrastructure. I think beneath that, property tech is super, super interesting. Ultimately, wealth and asset management. We've also invested in base layer connectivity, which we think is a predicate to people being able to consume financial products and services. And then where we finished our conversation, I think, is where we'll see some of the most exciting and disruptive spaces, which is in and around digital assets and DeFi.
Sure.
Great. Thank you.
Álvaro, for you, do you see regulation as a risk factor for investment in Mexico?
So we've, sitting in this stage, we were talking about the fintech law 4 years ago, and a lot has changed since then. It's definitely been an evolving scenario. But I see the regulators coming back to valuing the tremendous value, sorry for being repetitive, that fintechs can bring not only to the financial services industry, but to the majority of the population. Sure. Fintechs tend to bring a much better value proposition and a much efficient solution. Therefore, costs are lower, and those costs can be transferred to the consumer. So we went from very positive environment 2018 to not so positive, and now we're seeing it shifting to a more positive. Something that many times entrepreneurs don't like is the fact that, you know, in order to play this game, you have to be regulated, and that means, you know, a lot of brain damage.
Yes.
Managing people's money is very, very delicate, and it's a game that it's for grown-ups. So if you don't want to get regulated, go and do something else. If you don't, because fintech is managing other people's money, and that's serious stuff, and too bad, you know. So I don't see it as a risk today. Maybe a year ago I would have said that it was a risk. I'm very glad to see things evolving in the right direction.
Great. Thank you for your remarks. Thank you.
Álvaro Brooks, thank you very much. It's a pleasure to have you here.
Thank you.
Thank you again.
Fuerte aplauso, por favor.